Alright, so let's get right into it. Vertical bar, smash the like button for the YouTube algorithm. When people hear the word trading, they usually picture guys in suits screaming on a stock market floor. But honestly, that's not the whole story. At its core, trading is just swapping one thing for another. That's it. It's the simple act of giving something you have to get something you want more. You do this all the time without even realizing it. It's not some complicated financial voodoo reserved for Wall Street wizards. It's a fundamental part of human interaction that has been happening for thousands of years, long before any stock market ever existed. Think about it this way. You have a sandwich for lunch, but your friend has a slice of pizza. You really want that pizza, and your friend is tired of eating pizza every day. So you both agree to swap. Boom! You just made a trade. You exchanged an asset you owned, the sandwich, for an asset you desired more, the pizza. Both of you walked away happier. This simple exchange is the bedrock of all trading, from swapping lunch items in the school cafeteria to multi-million-dollar deals in the business world. The core principle here is unbelievably simple. Value is subjective. What's valuable to you might not be valuable to someone else. Let's break this down with an example that has absolutely nothing to do with stocks, but everything to do with value. Imagine you're a huge fan of limited edition sneakers. A while back, you waited in line for hours and managed to buy a pair of exclusive Air Jordan 1 Retro High Hyper Awesomes for $200. You kept them in perfect mint condition, still in the box, never even tried them on. Now, fast forward a year. Your friend Alex finds an ultra-rare, factory-sealed copy of a classic Nintendo 64 game, Super Giga Quest 99, at a garage sale for $10. Alex knows this game is a collector's dream and is easily worth a lot more. Meanwhile, you've been seeing those Hyper Awesomes selling online for around $500 because they're scarce and in high demand. You like the sneakers, but you're also a huge fan of old-school video games. This is where the magic of trading happens. You see Alex's vintage game, and you really want it for your collection. Alex sees your pristine sneakers and wants them. You start talking and both recognize these items hold value to specific collector communities. You both do a little research online and confirm your sneakers are consistently selling for about $500. Alex finds similar sales for the sealed game. The values are almost identical, so instead of selling for cash and paying fees, you realize you can just trade. You propose a straight swap. Your Hyper Awesomes for Alex's Super Giga Quest 99. Alex agrees. You've just completed a perfect cashless trade where both of you walked away with something you valued more. A one-for-one swap worked because both items had similar market value and were desirable to each person. That example shows the basic mechanics of trading. Find value, confirm market price, and swap when both sides win. The very first step in any successful trade, and this is incredibly important, is identifying or acquiring something that other people will actually want. This is the whole game. It's not about what you think is cool or valuable. It's about what the market, meaning other people, thinks is valuable. You could have a rock from your backyard, but if nobody else wants it, you can't trade it for anything. Value is determined by demand. So your first job is to become an expert in what's in demand. This could be anything: limited edition sneakers, vintage furniture, rare trading cards, designer handbags, first edition books, popular toys. Find a niche and understand it. You need to know which items are common and which are rare. Learn what makes something desirable. Brand, condition, scarcity. Is it the brand, the condition, the scarcity? These factors determine demand. By understanding these factors, you can spot opportunities to acquire items that have a high potential for trade value, often for a lower price. Let's go back to the sneaker example. You didn't randomly buy them. You knew they were a limited release from a famous brand. You're always on the lookout for assets that are currently undervalued or likely to become sought after in the future. It requires a bit of research, intuition, and patience. Turn on notifications and watch social feeds. So your homework is simple. Go to flea markets, garage sales, and thrift stores with a purpose. Look for hidden gems other people overlook. Find items where you know more about their true market value than the seller does. This information advantage lets you acquire tradable assets for less than they're worth, setting you up for profitable exchanges. Be informed, be patient, and always research before you buy. Okay, So you found something with potential value. Now comes the second and arguably most crucial step: determining and agreeing upon its value. This is where negotiation comes into play. A trade can only happen if both parties agree that the exchange is fair. If you think your sneakers are worth $500, but the other person thinks they're worth $200, the trade is dead in the water. You need to find common ground, a shared understanding of what each item is worth. This process is called price discovery. It isn't just pulling a number out of thin air. It's based on real-world data. You can go on sites like eBay, check collector forums, or look at specialized marketplaces to see recent sale prices. This is called checking comps, comparable sales, and it gives you an accurate idea of current market value. You went online and saw multiple pairs sold in the $480, $520 range. Alex found game sales around $490, $510. Armed with data, you can confidently agree a one-for-one swap is fair. Data replaces emotion with cold, hard facts. Sometimes values don't match perfectly. If your sneakers are worth $500 but Alex's game is $400, negotiation gets interesting. Alex might add cash or another item to balance the deal. For example, Alex could offer the game plus $100, or the game plus another less rare game worth around $100. The goal is to balance the scales until both sides feel they are getting a fair deal. Use data, check comps, negotiate transparently. That's price discovery in action. Price discovery equals signed data plus honest negotiation. Once you've found your trading partner and agreed on value, it's time for the final step: executing the trade. This is the moment of truth where the actual swap happens. It might sound simple, but how you handle this step is critical. The logistics of the exchange really matter. Are you meeting in person or are you shipping items? Decide and plan ahead. Trust is massive. If you meet in person, choose a safe public place, coffee shops, police station parking lots, or busy squares. Bring your items and inspect what you're receiving. Last chance to confirm condition and authenticity. After inspection, you simply make the exchange. Hand over the sneakers. Alex hands over the game. You shake hands and the deal is done. If cash was part of the deal to balance values, that money is exchanged along with the items. Transparency and mutual inspection are key to reducing disputes. If you're trading long distance, it gets more complex. Who ships first? What if one person never ships? People often solve this by using a trusted third party or an escrow service. Both of you ship to a neutral middleman who inspects items against descriptions and forwards verified goods to new owners. This adds security and greatly reduces the chance of being scammed. Whether local or long distance, plan logistics, verify condition, and use escrow when trust is limited. Meet in public places, inspect thoroughly, and consider escrow for distant trades. So why do people go through all this trouble to trade things? It really boils down to three main reasons: fulfilling a need, satisfying a want, and making a profit. First, needs. Barter lets specialists access what they need to live. For example, a farmer trading apples for bread. This is how early economies worked. Next, wants. You don't need limited edition sneakers or rare comics, but you might want them. These trades are driven by passion and power, huge markets for luxury and collectibles. Finally, profit. Trade to sell for more money. Start with $200 sneakers, trade up to a $500 game, then sell it for cash. That's a $300 profit. That's the essence of professional trading. Buy low, trade up, and sell high. Trading knowledge can become a serious source of income if you learn to spot undervalued items and convert them. It's a skill that builds wealth over time. Trading also lets you get things you want without cash. Leverage what you already own. But be aware of downsides. Bad trades, misjudged markets, or scams. If you think your sneakers are $500 but they're actually worth $300, you can lose value in a trade. This happens when you don't research properly or misjudge the market. Use secure platforms, meet in public places, inspect items, and be skeptical of deals that sound too good to be true. Trading can be rewarding, but be smart and cautious to avoid pitfalls. Trading isn't confined to a single place. It happens everywhere, all around us. It happens in a variety of venues, both physical and digital. collectively called markets. A market is any place where buyers and sellers can meet to exchange goods, services, or information. It can be an informal conversation between friends or a global online platform with millions of users. Traditional physical markets include farmers' markets, flea markets, craft fairs, and antique shops. Great when physical inspection matters. You can see, touch, and haggle over items face-to-face. Online marketplaces have revolutionized trading. eBay, Facebook Marketplace, Etsy, and specialized platforms like StockX connect millions. These platforms make it easy to find items, check price history, and reach a global audience. They also provide tools, price history charts, user reviews, payment protection, and even authentication services. But many trades still happen informally, directly between people, friends, family, or club members. Private trades can be cheapest, no fees. But they carry the most risk if you don't know the person. There's no third party to mediate if something goes wrong. Choose the market that fits your item. Physical when inspection matters, online for reach and data, escrow for long distance. Private deals work when trust and relationships exist. Markets come in many forms. Choose wisely, use tools, and always verify what you can. Inspect when needed, use protections when distant, and vet your trading partner. Like anything that involves money, trading has both incredible benefits and some real risks. It's not a guaranteed path to riches. Go into it with your eyes wide open. On the upside, benefits can be huge. Profit, new items without cash, and spotting undervalued items. It can become a serious source of income if you build the skill. Want a $600 bicycle but no cash? Maybe you have vinyl records worth $600. Trade them and convert value. Trading helps you leverage what you already own. Downsides: a bad trade can cost you. If you misprice an item, you lose value. If you overestimate and trade for something worth less, you end up worse off. Scams are another real risk. Counterfeit items or someone asking you to ship first and never sending theirs. Use secure platforms, meet in public places, and insist on verification when needed. Always inspect items thoroughly. Serial numbers, authenticity tags, condition checks. Meet in daylight, bring a friend, and use escrow for distant trades. When done correctly, trading can be rewarding. New items, extra cash, and a growing side business. Be smart, research, verify, use protections, and don't chase unrealistic returns. Trading can build wealth, but it's not magic. Skill and caution matter. Summary: research, verify, protect. When we zoom out and look at the big picture, trading isn't just a niche hobby or a job for bankers. It's a fundamental activity that underpins almost every aspect of our modern world. Every time you buy groceries, you trade money for food. The grocery store traded its money with a distributor who traded with a farmer, a long chain of trades. Trading allows specialization. The farmer can focus on farming rather than baking bread or building cars. They trade crops for money, then use that money to trade for other things they need. Even your job is a form of trading. You trade your time and skills for a salary. You then trade that salary for rent, food, and entertainment. Money is a universally accepted medium of exchange that you can trade for literally anything else. This mechanism moves resources where they're most needed or desired. It moves sneakers from someone indifferent to a passionate collector, apples from surplus farms to cities with scarcity. It moves money from companies to employees so families are provided for. It's a constant cycle of exchange, the dynamic force that makes economies work. So the next time you swap a book with a friend or buy a coffee, remember, you are a trader, participating in an ancient and essential activity. Trading is everywhere. Learn to spot value, be fair, and trade smart. If this helped, like, subscribe, and check the description for resources.